Maverick Traders. This is Rob Reinhold. This is the trading room for May 9th through the 13th. And I'm joined by Mr. Darren Fisher as always. Let's jump into what happened last week. Last week was a crazy week. A lot of stuff happened. So let's first of all talk about the Fed. We got a Fed report on Wednesday. Now, before the Fed meeting, we had had two mild up days. Monday was an up day. Tuesday was an up day. And on Wednesday, we actually were down about 1.5% before the meeting. And then we came back a little bit. And then after the meeting, the market took off. And Thursday was a 3% up day. And so at one point, the markets were up 4% for the week. Then on Thursday, the market fell apart. It gave back everything it had made, not only on Wednesday, but also on Tuesday and Monday. And then on some point on Friday morning, the markets were down 3% for the week. And then they clawed their way back up to almost flat for the week. That is wild volatility to have a 7% range in a week. And so we got a lot of volatility. This is the fifth consecutive down week. And we're right at those support levels. So we're just keep tickling below those support levels, and then it keeps recovering a little bit, and then it pushes down and recovers a little bit. It's not really great price action if you are bullish the market. It's just telling you that there's a lot of heavy overhead supply weighing this market down. The economic reports were so-so. We did get ISM manufacturing softened a bit, and we got productivity plummeted. Which is one of the components in inflation and stagflation. So that's not what we want to see there. But we did get a good payrolls report, better than expected, a little bit weaker on the wages, but basically saying the economy is not as strong as it was 3 months ago, but it's still growing. It's still doing okay. U.S. bonds up above 3%. It's the highest since November 2018. Other interest rates around the world, the German Bund is above 1% for the first time in over a decade. So again, we're seeing interest rates rising across the entire world, and all of that is affecting markets. And if interest rates keep going higher like we think they are, we're going to continue to see effects on the market. So let's take a look at the performance here. You can see Dow, SP, mildly down for the week. So at the end of the week, it looked like, oh, nothing happened. If you look inside the week, wow, a lot happened. The NASDAQ was much weaker. It was weaker all week long and actually closed negative along with small caps. Check out oil. Oil said, we don't care, we're our own market. We're going to run higher. So if we take a look at the SPY here, you can see at some point on Friday, it looked really grim. Like at some point Friday, this was a big old fat red candle. And at one point you're like, oh my gosh, it's done. It's dead. We're going to break through this support and really fall. And then it decided to, you know what? Let me recover just enough to make nobody happy, to make neither the bulls nor the bears happy. So this here is a key point. And you can see here we keep plunging below it, recovering, plunging below it, recovering. This kind of price action tells you that it's not ready to break quite yet, but it's possibly getting ready to break. We'll have to see what happens at the first part of next week. If we get to the Qs, you can see the Qs have clearly broken through. The Qs have clearly broken through and had a lower close today. So the NASDAQ looks dreadful. This is just an all-out sell on the NASDAQ. Now, remember, last week, both Darren and I, we both agreed that the market was getting ugly, but because we hadn't seen any capitulation. And again, capitulation is forced margin selling. It's people panicking. It's when you're watching CNBC and everyone starts yelling at each other and getting mad, and Rick Santelli loses his mind, and the VIX spikes. So to get all those things, you get this capitulation. And we got that in early February when the market went down 10%. And we got a huge rally off of that. Now, look, the rally lasted for 2.5 weeks, and then it fell apart. But we have to start looking at, okay, are we getting the capitulation? Thursday's move, down 5% on the NASDAQ, was absolutely capitulation behavior. That was forced selling. That was panic selling. Everyone said, oh my gosh, I want nothing more to do with it. At one point on Friday, it looked like that was going to continue, and then the market held in. And so we still, like I said, we're getting closer to capitulation, and we're getting some signs that that's happening. But big question is, are we there yet? Darren, what do you think?
I think no. I think there's too much hope left in the market. You know, we were talking about our outlooks beforehand, and we'll see that in a little bit. We're both at zero. The questions, the disagreement that we had is how do we attain that zero? If you go back to the chart of the S&P, you can see that that's some real weak sauce support at that level. I mean, it is the February lows right there. We've hit it. We've touched it. We've been trying to pierce through it. I think that we get a zero, but I think it's just trying to hold the support right here. I think it's that we just get these little bitty candles, maybe average size candles, but I think it's, you know, an up day, down day, and the traders are going to desperately try to hold this level as support. So that's where I think we go on this.
And again, I agreed with Darren that it was a zero. And my call is we plunge first part of the week and recover in the back part of the week. Ultimately, a zero. So this next week, this is not a very busy week as far as news goes. Last week was a very, very heavy news week. Lots of stuff going on. The market is going to take a little bit of a break, most likely. So if you want to take a look at, you know, this week's events and what's on the calendar, it definitely fits Darren's narrative much more than mine, that this week is going to be a week where everyone says, oh my gosh, that was crazy. Take a breath. What do we want to do? And then have maybe a major move a week down the road. So there's just not a lot going on here. We do have CPI on Wednesday, plus 8.1% expected. That's just such a big level. So when you take a look at our outlook, we're at a -3. You can't get more negative than we are right now. At least we can't. We literally can't because our scale doesn't go past -3. We could just put some more numbers in. And it's like, you know, remember in Spinal Tap, Darren, when they had the speaker that went to 11?
Yes, I do. That was a great movie.
I just love explaining to him, like, okay, when it's really loud, you have it at 10. But when you need that extra little bit, you turn it to 11. He's like, well, isn't that just the same as 10? No, you don't get it. All right. Anyway, so let's get back to the markets here. We're bearish here. Both Darren and I agree that this week is a zero. He thinks it's going to be a meandering market that doesn't really know what to do here. I think it's going to be a plunge early in the week and then a rally later in the week. Now, let me tell you, if you are a bull, you should be cheering for my outlook. Because if we get a flush out, we can get a meaningful bounce, just like we did back here. Just like we did back here. Again, here's a big meaningful bounce here. Here's another one right here. We can get these big meaningful bounces. There's another one here. But it has to be a flush out. You have to get a flush out. And this price action here, it's not really a flush out, because look at the preceding price action on these big bounces. We had huge moves to the downside, just enormous moves to the downside. This one is not all that brutal yet, which is why we both think it's going to go lower. So ultimately, whether it goes sideways for a little bit, down for a little bit, we think the next move is likely lower in these markets. Anything to add to that, Darren?
No, you're right. You know, if you want to be bullish, like you said, your version of your view of events is the one that you want to take. Mine has us going sideways, and then you're right. The next step is falling off a cliff even lower. And I think that's when this next run down is when we meet the technical definition of a bear market, where we lose that 20%, and then from there, all the chains come off, and it's going to be, nobody's going to want to buy anything. And I actually think, the market itself is a forward-looking instrument, but I think if we blow through the 20% mark and it does become a technical bear market, I think that has feedback repercussions on the rest of the economy at that point. So let's take a look at some sectors here. I was really surprised how few sectors actually changed when I was doing this. Now you can see the performance. Energy, that's a monster number. We've had some really good action from energy the past year, but I don't think it's ever been up to this level. 10.34% for a single sector, and that's just amazing. Real estate, surprisingly, worst performing, and you'll see that there. They're one of the ones that I downgraded. We'll get to them in a little bit. And consumer, not looking good. Everything else, for everything else except those three sectors, it was really just kind of a meh week, but it was very volatile. When you look at the end, you look in there and it's like, if you just looked at the week, it's like, nothing really happened. If you're actually trading during the week, a lot happened. So it depends on what kind of trade you want to be. So let's take a look at the individual sectors. First, start with utilities. I was at a 0 last week. I'm still at a 0 this week. If you wanted to make me the case for a -1, you very well could, but I like the action on Friday. So I think this goes, maybe retakes the 50 and then just meanders right there. That's entirely possible. Then, that's going to be a 0 for me. Communication services, again, not looking good. We were at a -3 last week, and I'm at a -3 this week as well. I think Wednesday's move was the bear rally for communication services right there. We came pretty close to that 20-period moving average, and everyone said, oh, that's the end of that one. And Friday looked really bad. You look at it, and you're looking that what was support in March has now probably just become resistance, confirmed resistance, and I think we're down from there. Looking at real estate, last week I was at a 0, and surprisingly, with the move that real estate had, I'm now at a -2. This is the type of market where you can have things, get promoted and demoted one or two, sometimes 3 or 4 spots in a week. It's just so volatile. Real estate was holding in there for a while, but now it's not in favor anymore. So I think this one, actually does go lower. It might need to wait for that 20-period moving average to keep up, but I think over the medium term, we're looking at a -2. Industrials was at a -2 last week, and I'm still at a -2 on industrials right here. You got the long lower shadow on Friday, but there's a lot done. This is another one. Wednesday's action put us up to the 20-period moving average, and then we just kind of fell from there. So we might not get the immediate -2, but again, medium term, I think we're to the downside right here. We've touched February's low in this sector as well, and we bounced off of it, but I think that gets eroded fairly quickly. Healthcare. See, for healthcare, I was in a -2 last week, and I'm in a -2 this week as well. This one, you could make me the case to go lower, but I see a little bit of support down there at the 120, 127 area, about right there, 120, that band right down there. So I think we do hit that, pretty soon. We'll see if that support holds. By that time, healthcare could very well become a -3. You look at it, just a month ago, this was one that we really liked. It was really performing well. This has given up all those gains and more in a very, very short period of time. Financials, -3 last week, and I'm at a -3 this week as well. This is one that has weakened and weakened very quickly. You go back to January, and you can see February we couldn't break through. March we couldn't break through. Lower highs all the way through, and it just wants to keep that downward trend. Great, show me good entry point, and I'm happy to keep short in financials. Consumer was at a -2 last week, and I think I'm in a -2 this week as well. You could make me the case for a -3, and I would entirely buy it. We just broke through that support that we set in, back in, in February, March, and then into April, May. So you can make me the case that, we're below it. This is -3, and I would entirely buy it. The net effect, though, is consumer no longer looks good, and this is something that you want to actively short right now. Tech, -3 last week. and I'm at a -3 this week as well. This one came up, bear rally pattern right there, breaking through support as we speak. I mean, this one, nothing's looking good. Tech has really led this market, this correction market down. I think it continues to lead us down even further. Base materials, I was at a 0 last week, and this is one of the ones that got demoted. I'm at a -1 on basic materials. Now, this just might be, you've got some decent support right here. You can see the closing candles, and we came down there. So you got support between 84 and 84.50 right there. And we could just continue to base, but or we could melt down right there. I mean, that's looking, this one looks good. If we do melt down, we're looking down the 82 area. But I think materials, they've been strong. I think they try to base here, and then especially in a high inflation environment, I think they eventually make a run to the upside. Energy, last week I was at a 0. I lost my faith in energy. I'm at a +2 right now. I mean, you see, the massive gain right there. We held in, and it was just a bull pullback to the 50-period moving average, and then people said, all right, step on the gas. Let's go. So energy is definitely looking good. So you can see right there at -3, tech, financials, and communication services. It's been a long time since we've had 3 sectors that, 3 or 4 sectors right there. Last week, I think we had 4. But you can see it's very, very bearish. Real estate, industrials, healthcare, and consumer, all to -2. Materials, again, downgraded to that -1. Utilities remains at a 0. And energy, like I said, back on the foot on the gas, and we're back at +2 on energy. Let's take a look at some potential trades that we're looking at as well. So last week in utilities, we had VST long, and we're really happy with the performance this week. You're going to see VST was up 6.4%. We're very happy with that trade as well. This week, we're looking at Duke Energy. Nice bull pullback. I would say it's confirmed right there. We had the low on Tuesday right there. It held support. Wednesday would be, I would say Friday was the definite confirmation right there, where you want to have a higher high, a higher low. So I would be more than happy to get into Duke Energy right there. What we're looking at, play this kind of conservative here, just that May 110, 115 bull call spread. It's a utility, it doesn't move fast, but you're giving yourself 2 weeks to make that run. And, hey, this is looking pretty good right here. In communication services, last week we had Zillow short, and Zillow was down 4.4%. So if you're in that trade, that's looking pretty good right now. This week in communication services, we've got AMC Theaters. Nice low base right there. I mean, this is one that last year, if you remember, about this time, this is one of the ones that was subject to a massive short squeeze, and AMC used that opportunity to refinance a lot of stuff. So they were looking financially in much better shape because of that short squeeze. You can see here they tried to make that run, hit that $30 high, and the gas just went out right there. And so we're below support at that 13 area. This is one. Is it going to go to the downside, or is there enough in there to make it worthwhile for the puts? Quite possibly. I'm going to play this a little more conservatively. Get that May 12-14 bear call spread. I think that's going to be the way to do it right there. It's just a $2 trade. You're probably going to be able to pull about $1.15 credit out of this, but you're not going to have a lot of theta decay on your side. It's going to be strictly a delta move in that deep of a bear call spread. And in healthcare, last week we had Johnson & Johnson long. This is one of the ones that didn't turn out too bad for us. They were down 2.3%. Still a decent move. You're in this, I'd say, with the market action, you could probably stay in this, and it possibly recovers. This week in healthcare, we're looking at Bristol Myers, BMY. You called a bull pullback, pulled back right between the 20 and the 50 period moving average, and this week was looking pretty good. We're outside that little flag channel right there. We're above the 20 period. I think this is a good entry point right here. I'm going to be looking going out to June. I can't believe it feels like January was just the other day. We're going to go out to June. go long those 74s, and I'm going to short next week's 78s against it and reevaluate right there. But this is one that I would not mind holding for, for 6 weeks. And you can see the last, the last move it had, last 6-week move it had, you were well rewarded if you were in this. So I'm happy to be long this one.
In the industrial sector, last week we had plug power to the short side, and plug was unplugged down 7.7%. So I know we had some traders in that. Great job on that one. So let's talk about this week. This week we've got the AZEK company. Now this is why I love scanners. And at Maverick, we are big opponents of watch lists. What I mean by watch lists is you've got your 20 little stocks that you've watched these things for years, and every so often you kick one off your list and you put a new one on your list, but these are yours, and it's stuff like Tesla and Amazon and Microsoft and Google. Everyone has the same watch list. Those are just so bad for you. Throw them away. We have scanners now. We have stock scanners that will go out. You just say, hey, I want to find this. I want to find this pattern with this moving average with this, and it gives you the list. That's your watch list. Now, look, I have no idea what this company is. I've never even seen it before, but I'm like, oh, look at this. This is a really good pattern here. We've got a low base forming to where it's breaking down to the bottom of it. So let's get bearish here. I'm going to go very easy, short and simple, 2021. Again, that's probably going to bring you in 65 cents of a credit, so you got 35 cents of risk. But, these are the kind of bread and butter plays. They're just really simple. So 2021 bear call spread. Last week in financials, we talked about UBS short. Well, UBS did not listen to us. It was up 1.8%. Look, that's a decent move, but it's not anything that's really going to push us out of the trade here. So we'll let that trade develop. This week, we've got Western Union to the short side. You can see Western Union had a big fall. Big fall here. Bounced back, could not recover above the opening price. And you can see the price action has been pretty negative these last 2 days. So the only question is, okay, where's your target? Where do you think this is going to go? I've got a target of 16. My target's 16 here, so a 16-18 bear call spread. It's right in the middle, so this one's going to be a 50-50, 1-to-1 risk-reward trade. So this is about as purely directional as you can possibly get. It's going to be a $1 credit. So you got $1 to gain, $1 at risk. Very, very controlled trade. It's very, very controlled. If you want to get more bearish, check out some puts, but I'm just going to do a spread on this one.
Yeah, last week in consumer, we had Philip Morris sideways. And I think it was the center strike was 100. And we were within $1.10 of that strike price where we closed. That was a really good sideways trade. I know a lot of people pulled in a lot from that, and it's good to have sideways on there. This week we're looking at American Eagle, AEO. You're in a low base. We just broke through on Friday. You can see, it was just, it's almost a stair step right there. From a couple of weeks ago, you had a gap down, and it just based, came down there. I mean, this thing's almost been cut in half in the past, 4 months. So there's definitely some weakness here. The question is, how do we play it? So I'm looking at this. I would be more than happy to do the 13-15 bear call spread, and go from there. I mean, you're almost right in the middle, right there, a little to the downside. But I think that's the play. Just go out to May. If you want to play it a little more conservatively, go out to next Friday and do the 14-15. But I'm gonna hold this until expiration. And last week in tech, we had Sabre. We were short Sabre. We were glad we were short Sabre because Sabre was down 17.2%. So if you got into that trade, pat yourself on the back, ring the register if you want, and go look for some other stuff. This week, we're looking at APPS. That's just Digital Turbine. This thing has been looking weak. We're below March support right there. We just broke below it from a low base today. So this is a great entry point right here. This is one that's got enough gas in it, I think, that this is worth the puts. So I'm going to go out to June and go long those 33 puts. And I'm going to size those for max loss. So that's going to give me the opportunity. If I size it for max loss, I don't have to worry about position management. This thing could go up to 40 for all I care, and I'll still still be sized. So I don't have to worry about having a 30% stop on some unhedged puts. Just size it for max loss and let them run.
In the materials sector last week, we had Freeport McMoran FCX short, and it was our favorite pattern, the belly flop pattern. It was down 6.6% last week, so great job on FCX. This week, we've got the same pattern in the same sector. So again, the belly flop, and if, for those of you that don't know the story, I've always called this setup a first stage downtrend, was what I called it. It doesn't really have a name, at least that I've seen. And so I was talking to our trader, said, hey, we need to think of a sexier name than first stage downtrend. And we came up with the belly flop. And what the belly flop is, when you have a stock that's in a very strong uptrend, and then some news comes out, and it causes it to plunge. A lot of times what happens is it bases for about 2 weeks, and then it has a big fall from here, basically trying to erase all of the gain it had previously. So the belly flop pattern worked great last week on FCX. This is Alcoa. So the big question is, how do you want to play it? And you just have to take a look and say, all right, well, where is my target here? I've got a target of 36. Sorry, that is the wrong number. 56. 56.60 is going to be the trade there. That is a very directional vertical spread, but I'm going to get paid for it if it turns out. So probably about a 3 or 4 to 1 risk reward on this one. In energy, last week we loved ExxonMobil to the upside, and it rewarded us up 7.5%. This week, again, it's the same pattern as ExxonMobil was in, an ascending triangle pattern, and we got the nice move on XOM last week. So this Apache Energy, there's no reason why this thing isn't going to make a run at this previous high and possibly break through it. Now, I love these diagonal call spreads when you're in this situation where it looks strong, but there's some overhead resistance right above it. So I'm going to do the 1 week. So I'm going to buy that May 27th 40 call. And just for this week, I'm going to sell the 45 call against that to bring in some premium. I'm going to lower my cost, lower my risk. If this stock just blows through this week, like Exxon did, yes, I left some money on the table, but I'm still going to be happy. A 1 week trade, I'll probably make 15, 20% return on my options trade. You know what? I'll take that. If we don't break through resistance and we come up to 45 and we struggle to get through it, I'm okay with that too, because again, this is a diagonal call spread. The risk graph says that my biggest profit will be at 45. That is the best case scenario for me on Friday for this thing to close at 45. And then if it does weaken a little bit, I do have that 45 call that I sold to offset some of my losses. As long as it holds this ascending triangle pattern, I want to be looking to stay long on this one. That is it for our trades. Everyone, go check out the Trader Forum. Log into your Maverick Trading account, go on the forum, and start sharing trading ideas with all the other traders. So in conclusion, are we in the process of establishing support? And not just support, but a place where we can have a meaningful bounce. We call these tradable bounces at Maverick. What we mean by that is that, when markets are going lower, we always have a few up days here, but every so often we'll get a major move that's like 2 to 3 weeks. We saw that in March. We saw a 2 to 3 week move that was huge. It was 8% in the S&P. Are we getting closer to that point? We are getting closer, but we just don't quite have it. Thursday's action was very capitulation. That looked like it, but then it didn't have that flush. And I still think we need that flush. We are at the extremes, so whenever we get to these extreme readings on a lot of these indicators, I tell everyone, hey, let's have your hair on the back of your neck be standing up and say, hey, you know what? Look, this bear market is pretty clear here. We're going lower, but we're getting closer to a place where we could have a meaningful bounce. If we do get the capitulation, that becomes even more apparent. And again, those hairs should be standing up on the back of your neck. If we, plunge 3, 4, 5% early next week, you got to be thinking, let me ease off of my shorts. Look, you're not going to go long. Don't try to catch a falling knife, but you're going to start easing off of entering new short positions. You're going to hold your existing short positions for as long as you can. If you get the capitulation, start to look to lighten those up. Take those profits and just go to cash, and we'll see what happens on the bounce. That's it for me. You have anything to add, Darren?
No, I think that's it. If you're going to remember, we've got several classes out there, characteristics of a bull market, how of a bear market, how to trade it. Go check those out. I think we're at an inflection week, and I think that's what we have to say here. Do we get the flush out this week? Rob, you think that's the case? I think we base and then fall again. We don't know who's going to be correct, but when we do see that bear rally, I think you've got to watch that position sizing. You've got to watch your position management, and only go long stuff that is held in there or made gains in the previous market. Don't go bargain hunting. That's about the best advice I can give right now.
Well, thanks for joining us. Everyone have a great weekend. Goodbye.
Bye, everyone.